Okay, for this video, I wanted to cover a common question I get, which is, can you file a superseded tax return for your Form 1040? Right, so superseded returns are one option, amended 1040X returns are a second option. So which one do you do, under what circumstances, and why is one better than the other? So a superseded return is a second filing that is submitted on or before the due date for that original filing, including the extensions, right? And so what happens there is when you file a superseded return, it effectively overwrites that first one. And the nice thing is, because it's overwriting that first one, that superseded return is now considered the original filing. Now, in contrast, an amended tax return submitted via Form 1040X is typically filed after the original return due date. So you file an original return, now the due date has passed, and you have to file a Form 1040X to amend that initial filing. The initial return remains as is. That is your first filing, and then this subsequent 1040X is that second filing that's an amended return. Now, superseded returns can really bail a taxpayer out. And so what I want to do here is, in a penalty context, talk about a simple fact pattern which illustrates this point. So let's talk about filing a 1040X because we missed something. So here's the fact pattern we've got here. We've got John. He's a U.S. taxpayer, and he files his 2021 Form 1040 on March 15th, 2022. So he's a month before the deadline. He did not file an extension request. Okay, that is a very important point here. So the due date for filing his return is going to be April 15th or April 18th. It depends on the year if there's a holiday there. But the idea is he's still got to get this thing done by April because he did not file an extension. On his 1040, he forgot to include a Form 5471 for his controlled foreign corporation ownership in a Cayman Islands entity, and he forgot to include an 8621 for a PFIC investment he had in a Swiss mutual fund. This is a horrible mistake, right? So he doesn't discover this error until after the return due date. It's May 31, 2022 when he figures this out. Now, in order to appropriately report all these investments, he has to file a 1040X to amend his 1040 and report these additional forms and schedules. Because this is an amended return, that original filing remains, and because this is an amended return, it's being filed after the original due date, he is going to be subject to penalties on these late filed additional forms. So if you look at Form 5471, if you look at the 8621, these are international disclosures that carry a $10,000 penalty per late or missed filing. So John, when he files his 1040X, he's going to get a penalty notice of 20 grand. And that's irrespective of whether he actually had any income from these investments, right? Just missing the form alone is a $10,000 penalty. Now, how would this change if John was able to file a superseded return? So let's look at the fact pattern again here. He's a U.S. taxpayer, but in this example, he files an extension request. So the Form 1040 due date is moved to October 15th, 2022. Now, he still decides to file before April 15th. So he files within that window, April 10, 2022. And again, he forgot to attach the 5471 and the 8621 for that PFIC investment. Now, he discovers this error the same date, May 31st, 2022, but here's how his options change. He can prepare a new Form 1040, include the 5471 and the 8621 forms and the inclusions, and file a superseded return. He does not need to do an amended return because the due date has not passed. Remember, he extended it to October 15th, 2022. Now, by filing the superseded return, you are overriding that original filing, and this return is now the originally filed and timely made tax return. Because the superseded return is now the original return, he hasn't filed 5471 and 8621 late. They are considered timely filings, right? So these are not going to be considered late, so he's not going to get a penalty notice for that 20 grand. This is a classic fact pattern where superseded returns really help the taxpayer. So the teaching point here is, and what I always recommend is, even if you feel like you're going to be filing your return before the original due date, April 15th or March 15th, if it's a S corp or partnership, I always file extension requests for my clients. And it's because we want a safeguard, we want a backstop for these kind of fact patterns. File the extension request, push the due date back to September, October, whatever it might be, and then do everything you can to get the return filed as accurately and completely in March or April if you want to just get it over with. But if for some reason something is missed, right, and these lapses in judgment, these oversights, they happen. I've had clients come to me in May or June and be like, I know we had this conversation, but I totally forgot about it. I didn't disclose this piece, right? So I had a PFIC, forgot about it. I know we talked about it, and then I completely omitted putting it down on the organizer. If that happens, if you file this extension request and you catch it early enough, you can file the superseded return and avoid these kind of penalties. So I hope that was helpful. Again, messaging here is always file extensions, and if you catch errors soon enough, do everything you can to file a superseded return rather than a 1040X, because you can avoid some of these late filing penalty issues. So that covers it. Thank you for watching, and I look forward to seeing you again on the next video. Thank you.